Good day, everyone. Before we start, we have to have a CFTC requirement here. It's a disclosure, and please read it very carefully. Today, now it's 2:48 p.m. Eastern Time, 17th of May, Wednesday, and we had a beautiful day on the swing automated trading. This automated trading can be ATM or fully automated based on an entry signal. So on that entry, as an example, on an ES is 2369.50. You can have it automated trade using your ATM and your own stop losses and your trailing stop, or you can let the system using the trailing stop. The system trailing stop is based on a fibs, and you can see it hit the target. If we notice here on the ES, we have the last price, the sell, entry price is exactly 69.50. Target price 58.50. This is where it is on the chart. 44 ticks, and then targets hit. Once the targets hit, the auto trade close off that trade. And it is beautiful today also on the DAX. Let's look at the DAX. We had an entry on the DAX today at 2616. If we are looking at the DAX, it is 118 ticks. We had an entry at 16.5, and the target is 56, and it hit right into the target. No sweat whatsoever. Let's look at the NASDAQ. On the NASDAQ today, we had an entry at 56.35, and here is the NASDAQ. Sell at 36.25. Your auto trade would take it exactly as that number, plus minus couple ticks on the bar close, and then is exactly to the target. And now there is a dead zone. That means the party is over here. Once it come into the dead zone, target, reversal, the zone support here, and it is over on the NASDAQ. And the same thing happened, 80 ticks on the YM, and then the mini NASDAQ, and then we have 53 ticks on the EMD, and the CL, it just took a new trade right now, and there is up 12 ticks. So the total on the 30-year Treasury bond, ES, NASDAQ, YM, EMD, CL, and the DAX, the total is 551 ticks, and this is the 30-year Treasury bond. Let's look at the 30-year Treasury bond. That one was a very, very early trade and nailed the 30-year Treasury bond, 51 ticks. As we speak right now, we have the CL went from 12 ticks into the profit to 13 ticks immediately on the CL. Let's look at it. A few seconds ago, we had the entry at 49.44. And then we have this support resistance line right there. We have a support, a double support from the Eurozone at 49.28, pulling back, and it's fixing to slam to the target at 49.19. Most likely we will be getting that today. Also, we had a beautiful runs today also on the Forex, but now the market, now look, we got a new entry on the euro dollar, and if you notice, the system tell you there is a new signal, and we have a new signal. Look how the market changed immediately. It is really that market from yesterday until today, it is really very fast, extremely fast. And now we have a sell entry at 47, and then we are having a target at 39.7. So this is really also something new. It is very interesting for the Forex. For the scalpers, for the scalpers, we have not changed the new contract on the CL. Tomorrow we will be changing to the new contract on the CL. But the market yesterday, we were in the room and we had all positive. Immediately something happened in the market, and then everything was in red. And then later on everything was in the green, and the same thing happened today. I haven't seen that in a very long time. Started in red, turned to green, then started in red, and then turned into green, and that it is amazing, and you can feel there is a volatility in the market. On the days like this, I mean, when the water is calm in the market and there is no news and there is no turbulence, so news can affect the market, and then it is beautiful to scalp. But when there is some important news and the market is like uncertain, immediately if you wanted to live trade, you no longer can use rank bar or full range. You need to widen up your on whatever indicators you have. You need to start widen up maybe to 15 minutes if you have only basic indicators, or maybe 3 minutes in conjunction with your 15 minutes and the 1 minute. Then you can pinpoint your trade. So on a days like this, it is beautiful to swing the market and not following the market by tick, because that can cause a problem on the fast moving market. Folks, that's all what we have today. God bless you all. One thing I want to clarify on the auto trade, that you can take one contract, because those market analyzers are based on one contract, 1 minute, one contract. But if you want to use the auto trade, you can use one contract, and you can decide to take the trailing stop one. The trailing stop one is a minor, as an example in this condition here, because the market is going down. The trailing stop one is a minor resistance, and then the trailing stop two, it is your major resistance. So if you are taking an automated trade or an ATM trade, you can adjust it to go on the minor trailing stop, or you can do it on the major, as an example right now. And this is really, even if you are auto trading and your auto trade got you out of the entry and exit to the target, most of the time, let's say the auto trade, there is no optimization required. There is no clicking anywhere on top of the bars or anything. The system plot those signals automatic to your chart. So if we are using the auto trade and we have that entry, the auto trade is going to exit at the target and it's not going to initiate any more trades, because now the short trades are over. Even if the market drop farther than the target, it's not going to take any more trade. However, if this ES is going back to the other direction and start building momentum, and now we have a long signal, then the auto trade is going to initiate that trade, and it's going to take a long signal, one trade only. Or, I mean, one signal. It's not going to keep flip-flopping between plus and minus, like if you are using an ATR or a MACD, no. So there is one trade to the target, and then you can adjust it if you want it. Also, you can have it 5 ticks or 6 ticks or 4 ticks or 2 ticks before the target, and then the auto trade can get out of that trade. But even if you are using an auto trade, we have a lot of traders also, they take advantage of the trailing stop, because those trailing stops are not dummy trailing stops. If we notice in that picture here on the ES 1 minute chart, on any time when the market hit the target, I cannot say every time, but the probability of that trade is going to go back, a pullback, and you have an option to re-enter that market. Whether you wanted to do it manually, you can do it manually, but the auto trade is not going to initiate any more trades once it hit the target. And the way it is designed, if you hit your target one time a day, you should be happy camper, because it's a swing trading. It's not 10 ticks trade. So for traders, they don't know where to enter the market. They can take advantage of the trailing stop 1 or the trailing stop 2, the minor resistance or the major resistance, and then they can re-enter the market and take their chances one more time. If you took that trade all the way to the target, I mean, I don't mind to sacrifice a little 10 ticks stop loss from the re-entry point, and maybe I will take a chance and add them. And if it don't work, it don't work. I mean, if you hit the target, you hit the target. So you can still have a little beef you can take out of that trade if you wanted to do it manually. And maybe later on, when we have time, maybe we will go ahead and upgrade the auto trade to re-enter on the trailing stop on the resistance as well. But maybe that is going to confuse the trader, so that's why we keep in it the signal, entry, exit, get it over with, do whatever you want to do. Once the new signal come up, then the auto trade, it will take that trade. As an example today, the market is down, so you would have had 1 or 2 trades on each one of them. This is it. I mean, you know, you're not in and out of the market a lot. Sorry guys, it took me a little longer on that one video. I want to say thank you very much. God bless you all. The market is not stable, and please, for the guys are following the market by the tick with a tight stop loss, maybe you need to a little bit be cautious with that right now, because things are moving extremely fast, and it is very good idea to have on the side, whether you are trading Renko bar, range, ticks, I don't know, every trader has his own ticks, but please try to look at the bigger picture and try to put the 3 minutes chart, whatever you have indicators, doesn't matter, and try to look at the 15 minutes. That can give you pretty much where is the direction of that market. In 2017, you cannot trade out of one chart anymore using basic indicators. Okay, this time really for good. Thank you very much. God bless you all.